Hi, this is Karen Metcalf, one of the owners of Eberhard Accounting and Tax Services, bringing you a fabulous tax tip. This is where we take our years of experience and explain the IRS tax laws, rules, and changes in plain English for the average person. Today's tax tip revolves around the changes to the 2020 tax return. Every year there's a few changes, and this year is no different. The first thing anybody asks me is when will they expect to get their refund? The IRS will not be turning on their systems until February 12th this year. That's about 3 weeks behind the normal processing. So if your tax return is normal and straightforward, you can expect to see a refund direct deposited into your account in about 7 to 10 days after that. If you got a paper check, it'll be another week or two for mailing and processing. Now, they're not recommending that anybody mail their tax returns in this year because that will further delay things. They're still working on processing the tax returns from last year. If you have an earned income credit, they've said that they're going to be doing some further checks on the earned income credit, which means that the earliest anybody can expect to see a refund in the earned income credit situation is the first week in March if it's a direct deposit. The second change this year is the recovery rebate credit. This is essentially for the people that did not get their full amount of the stimulus that they're entitled to based on their 2020 income. It could be you got an extra child or your income was too high in the prior years that they used to calculate the credit. So essentially, on the form, which I will show you, line 30 on the form, and this is for the 1040 and the 1040 SR, is the place to put the missing amount of the stimulus that you did not get. The IRS has provided a worksheet for this credit on page 59 of their instructions for 2020. As you can see, it's got several boxes to check and several lines, and basically it'll fill in how much you should have gotten, and then you fill in and subtract how much you did get, and then put the difference on your tax return. The third change this year is the ability of people who are not itemizing to be able to take a charitable contribution deduction. If you're itemizing, you're still going to do it the same way you always do on Schedule A with your charity donations. However, if you're taking the standard deduction, you get to take up to $300 of your charity donations on the front page. And it's on line 10B on the 1040 and the 1040 SR. Now, if you're married filing joint, the total is $300. If you're single, the total that you can go up to is $300. If you're married filing separate, the total that you can go up to is $150. Now, this is cash and checks. It is not clothing or household goods or items. So the non-cash stuff is not allowed. So if you gave $500 to your church, you can take up to $300. If you gave clothes to Goodwill, that does not count. Now you still have to substantiate and have records and proof. Thank you for listening to the tax tip from the tax lady. Remember, the staff at Eberhard Accounting can take care of your tax needs or answer your questions, whether you're local, across the country, or around the world. If you like our video, please click the like button and please subscribe. Thank you.